Hi and welcome to Academic Compliance Academy of Anti-Money Laundering. In this video I'm going to talk about the overall risk assessment system. Not risk assessment per se, but the system that it needs to fit into in a larger scale to combat money laundering. So I put up a visualization here where we take a point of view from a member state within the European Union to look at how risk assessments are conducted through a chain. And let me emphasize, an ideal chain, because of course reality is more complex than this. So at the top we have FATF. FATF makes mutual evaluation of different jurisdictions all around the world, and they also make some risk assessments in types of reports, reporting what is happening and what are the threats in the market, in the international sphere at the moment. So these risk assessments are being used down this chain of risk assessments as information given on that everyone else need to address. So the next one in line is the European Union. Here the Commission needs to do a risk assessment of the internal market and the money laundering risk that the internal market is exposed to. In that risk assessment, they will take account of whatever information they have gotten from FATF, including what they have gotten from the member states. That is why the arrows go down, but also up again. But let's just try to keep it simple. So the EU makes a supranational risk assessment. This risk assessment is then passed on, being public, to the member state, and the member state also have to do a national risk assessment, implying and taking count of whatever information they have gotten from the Commission in the EU and at FATF level. That national risk assessment is then made public to, here I just post banks, but any obliged entity within the anti-money laundering regulation scheme. So they have to make a risk assessment individual for their operations, taking account of the national risk assessment, the supranational risk assessment, and whatever FATFs come with information. On top of that, of course, this is way too simplified. There are also other sources that everyone needs to take account on, and that could be the EBA, the European Banking Association guidelines, the World Bank, the Wolfsburg Group, and Transparency International corruption list, for example. So the idea here is that all these risk assessments go down in a line. At the same time, the obliged entities, here represented by the picture of a bank, feed in information to the national level and EU level. This information goes on, so the obliged entities give information on how they conceive their risk exposure up through the system back all the way up to FATF. In here we can see that the chain really connects all the way up again. So whatever information comes from the lower ground goes back up again and becomes a part of a new iterative cycle of risk assessment, starting at FATF coming out with some information, the EU making the supranational risk assessment, the national risk assessment at every member state, and again addressing every obliged entity that needs to assess and take account of what is happening. Of course, any obliged entity also need to evaluate their own risk exposure, not just in terms of national, supranational, and what FATFs come with, but also their client base. What are the news? Which new products do they use, etc. But this is just a visualization of the chain of risk assessment, because all these parties make risk assessment and they are interconnected in a chain, kind of not a chain reaction, but a chain of information sharing, and that everyone needs to look what the other parties have come up with to make sure that we try to use our resources in the combating of money laundering in the most optimal way. So this was just a short introduction to, let's face it, an ideal chain of the risk assessment system. So one important note to put in this is that this system is what we have regulated. And when you do risk assessment, there has been a tendency of many of the parties focusing on the ex post picture. So that means that we look behind, we look in the mirror and say, so what has been our risk so far? We also need to make an ex ante look ahead risk assessment. And we can see that more and more member states, and of course also obliged entities, they're kind of the primal motor on doing this ex ante view. But member states are also trying to now do a strategy when they do their risk assessment, their NRA, to look to the future and see, okay, so what have we maybe not seen yet, but what do we fear and where should we tend to look in the near future? And this is a good advancement because it hasn't really been the case so far that we saw a lot of ex ante movement in the NRA. But at the same time, if you look into the regulation, it is not a demand per se. The same accounts for the Commission. So we will look forward to having a more future-oriented kind of strategy-based supranational risk assessment in the future, hopefully. So this was just a short introduction to the ideal chain of risk assessment and kind of the evolvement that we can see in the market. So stay tuned, subscribe, and let's talk much more about money laundering.